think that was in the TD report, and they said that in 2019, we were at a point where the growth in demand, and if you looked at the growth in demand for silver and the existing supplies at that time, we had basically 165 years of supply, nothing to get excited about. 4 years later, we had 2 years of supply based on the amount of demand growth. So that's a dramatic shift. And their estimates were the same as mine, which was that, earlier this year, we were at a point where we had probably 12 to 24 months of this going on, where we would actually completely drain these secondary supplies. And there would be no more silver available to just go and tap like that.
Total silver demand has far outstripped new supply in the previous 3 calendar years, with 2024 demand forecast to be more than 20% greater than supply. This supply deficit should provide a supportive environment for further price appreciation. However, there are other factors at play. Around 15 to 20% of annual silver supply comes from recycling, and as the silver price pushes higher, more recycled silver material may come onto the market, tempering any price action. Former portfolio advisor Peter Krauth cites a TD report showing that the silver supply projections have plummeted from 165 years to just 2 years. He predicts that secondary inventories will be exhausted within 12 to 24 months, potentially leading to higher silver prices. Despite a structural deficit noted by the Silver Institute, Krauth underscores the silver price seems capped at $30. An analysis of silver production costs and the action of metal prices raises several questions about the strength of the market in the future. Note that the price of silver has recently recovered to trade at around similar levels to 2021, where it traded between $23 and $30 an ounce. Meanwhile, Krauth highlights that between 2021 and early 2024, some markets saw a decline in silver inventories by as much as 70%. He believes industrial consumers have been tapping into these stockpiles at spot prices, preventing significant upward pressure on silver prices. As technology continues to develop, the need for silver in these industrial use cases will likely continue supporting higher prices. And that means the overall demand largely depends on the outlook for demand from China, which was instrumental in boosting industrial demand for silver last year. Now, we present the clips of Peter Krauth's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
People had been asking me, and naturally I'd been wondering myself, why does the silver price look like it's capped or felt like it was capped at, say, 28 or $30 if, according to people like the Silver Institute, we are in a structural deficit situation. We are now producing or supplying about 1 billion ounces of silver per year, say to 80 to 85% from mining and 15 to 20% from recycling. And we're consuming 1.2 billion ounces. So that's a huge deficit. With that in mind, how are the silver prices not sort of exploding higher? And, came to the conclusion that there had to be some way that, in my view, at least, industrial users who are these consistent buyers and really truly require the silver on an ongoing basis, we're getting supplies. We're getting supplies without having to pressure newly produced or growing production from mining and or recycling. So when I started doing my digging, I thought, okay, well, where could there be sort of, secondary supplies, decent amounts of silver that are just already there sitting above ground? And so actually, if you look back far enough, say about 15 years or so, not every year, but on balance, there was at least a few years of what we call maybe surplus, right? So between what was being consumed and what was being produced and brought to market through recycling, et cetera, there was more supply than there was consumption. And so that supply was sort of shunted into, the ETFs, going to the futures markets. And the three big markets are the Shanghai, the LBMA, and the COMEX. If I can dig up some inventories for these markets, let's see what those look like. Well, I was able to find these, and lo and behold, there's a clear pattern. So from about 2021, depending on the market, either early or mid 2021, you start to see these inventories of what I call secondary inventories, really sitting, these above ground piles of silver sitting in these markets and starting to really draw down quite quite consistently from, as I say, early to mid 2021. In some of those markets, the drawdown from early 21 to early 24 was to the tune of anywhere from 40 to as much as 70%. And so we're talking about, maybe 1 billion ounces or more coming down to maybe 300 million ounces. And if more specifically, what's interesting is if you look at the LBMA, they actually store a lot of the silver for the silver ETFs. So you can't account for that. You have to keep that aside. You have to look at silver ETF inventories on their own. Those have been drawn down. And if you look at what is actually available for delivery in some of these futures markets, it's often a small portion of what is actual inventory. At the end of that, when I saw these charts, I said, wow, this is amazing. More than likely, I mean, if you apply logic, you figure this is where a lot of the mostly industrial consumers, to some extent investors as well, but have been tapping silver above ground stockpiles. They're able to go buy this silver at spot price, not pressure new production, draw that down, and the price was able to stay more or less flat, capped at 28 to maybe $30. But that can only go on for so long. These inventories have been drained pretty considerably. I'm going to say probably to the tune of at least 70%. And it was an interesting stat. I think that was in the TD report. And they said that in 2019, we were at a point where the growth in demand, and if you looked at the growth in demand for silver and the existing supplies at that time, we had basically 165 years of supply. So nothing to get excited about. 4 years later, we had 2 years of supply based on the amount of demand and demand growth. So that's a dramatic shift.
During the interview, Peter Krauth revealed the significant demand from China, with buyers willing to pay a premium and advance for silver, highlighting tight market conditions. The Shanghai Metals Exchange has reported a significant surge in silver volume, with prices consistently higher than Western exchanges. The price premium in China compared to the West has been as high as 10%, signaling a robust demand for silver in China. Chinese silver imports have also surged, hitting a three-year high of 390 tons last December. In June and July this year, imports broke through the 400-ton level. A year ago, import levels were half that, averaging in the 200-ton range. Regarding the trend of subsidized solar panel production in China, Krauth predicts that lower costs and increased investment will enable China to dominate the global solar market. According to a recent Bloomberg report, the Chinese are producing solar panels at an excessive rate. Some speculate that the Chinese are engaging in low-level economic warfare to squeeze Western economies. Let's get back to the interview.
This is a good-sized primary silver producer, and they told me that they sell about half their production to China and about the other half to the West. And they said that their Chinese buyers are very, very anxious to get their hands on the silver. They're prepared to pay a couple of weeks in advance of delivery, and they're willing to pay. This goes back to March. They were willing to pay $3 to $4 over spot to get that silver. That's how desperately that they actually wanted the silver. Basically, what he was telling me was that they can totally sense how tight the market is, how restricted supply is versus demand, and that was a clear sign to them of pointing towards that. I have the sense that solar panels and solar panel production in China could well be subsidized. I'm just saying I don't know that for a fact, but it would not surprise me. Their prices keep coming down, and yet I have a hard time understanding really. I mean, you can have economies of scale, that there's that prices keep coming down to in terms of the final prices if you want to buy panels, if unless you're looking at tariffs that are added on top of that. But the initial prices keep coming down from Chinese manufactured solar panels. And I think that, if their costs or if many of their costs keep going up, then it's, to me, logical to conclude that there's some level of subsidy going on. It helps them dominate the market, obviously, because they can keep their prices low. People want to keep buying from them. And they're already at 80+% of worldwide manufacturing capacity. And the International Energy Agency has said that they see by 2027, solar will be the dominant supply of energy globally, surpassing, I believe it was coal for the first time ever. So there's a lot more money that's being pushed into manufacturing of solar panels, and it has actually, I believe, also surpassed oil now in terms of the amount of money going into that industry. So that's pretty impressive when you think it just means that a lot more of the world will be reliant on China for solar, which is, as I say, again, becoming more and more of a dominant source of energy.
Factors such as industrial demand, a weak US dollar, and new high-tech uses for silver also contribute to the potential for price increases. Recent upward momentum in the price of silver has correlated with increased industrial demand. However, white metal continues to lag behind gold's rally to all-time highs of $2,500 an ounce. How do you think the potential depletion of silver inventories and increased demand from China will affect silver prices in the near future? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.